one of you, to the panel. I'm so happy to be moderating this today for the thing. How the innovative products in the mutual fund industry has helped and how it will evolve further and how we can expect it to be. So we have all the senior people here, all with rich experience, all more than 2 decades of experience. So one by one, we can to set the context on this, I would say, only the change is constant, and our industry, we have seen the most updated one. That is why we keep, the very reason of this knowledge summit is we keep updating us on, and that is the very essence of this industry. So with no further ado, I'll go on because we are running out of time. In your view, which innovative mutual fund product have had the highest impact on the industry's growth? That is a question I would have for Mr. Megul Sangani.
Yeah, so thank you. And see, the impact when we should look at from the parlance on what the customer is behaving like. So when we look at numbers, the numbers suggest the shift is happening from return-based investment to goal-based investment. And second is SIPs are becoming the cornerstone of investments. So if you look at numbers, from over 9,900 crores in August 21, SIPs have moved to 26,450 crores. So according to me, that's one thing which has changed. But what I feel, because over last 10 years, we have promoted SIPs like anything. From here, step-up SIP is the next big thing, which according to our fund house or everyone in the industry seems, because that goes well with increasing the wallet share of the existing customer, and that has the potential for the investors to have higher returns.
Perfect. Step-up SIP is the one product which is most innovative and most useful. It's a win-win for both our MFDs as well as the clients, but it's not noticed, I feel. So I would get your suggestions, although Mr. Nitin.
Yeah. Thanks, ma'am. Good afternoon, everyone. So I think I would agree with what he said on SIP for sure. But on the recent trend, what we've seen in the recent past, specifically on clients who have started investing more on the hybrid category as such. So we've not seen clients taking too much of advantage on the SWP category as such. So I believe going forward, SWP as a category should catch more attention because the interest rates are not too attractive. People who want regular cash flows, definitely it's one of the positive tools what our industry has, which has not been in a proper limelight as of now.
Absolutely. Like how SIP gained a very big notice because of thanks to all the AMFIs, SIP Sahi Hai. Like that, I think next SIPs, SWPs are going to take up. So what one innovation do you think will dominate this MF industry in the next 5 years? Because in consultative with the theme of our IFA Galaxy Vision 2035, Mr. Viraj, can you?
So I strongly believe that innovation should be the heart of everybody's vision board. But what is more important for the next 5 years and a 10-year perspective is a category called as momentum. We always think momentum is outside value and growth and it's something else. But when you mix momentum with value, you see what has happened in the last 5 years. And when momentum was with growth, you saw what happened in the last decade. So if you can catch hold of the category right and be with the right perspective of investment, then wealth is just an output number. So please read about it. Please master that particular subject matter. And if you can catch hold of it right, then you will be in the right position to advise the client and also us as a manufacturer to give the right product at the right point of time.
I would go on to Mr. Saravanan for the same question. Which one innovation you think will dominate in the next 5 to 10 years?
Yeah, thank you. Good afternoon, everyone. So we are a new fund. We'll be coming out with our schemes in the next 2 months. So if I have to specifically address this query, See, the focus on asset allocation will be more prominent. Because of the emergence of hybrid funds, clients are unable to understand the extent of equities they are already in.
Correct.
So I think the product clarity will emerge, and this, the educate and excel, the IFA community is constantly learning. These learnings have to be passed on to the clients, and again, it has to come from top down. The AMCs have to provide product clarity, which will get passed on to the investors through the IFAs.
Oh, wonderful, wonderful. Thank you. And to you, sir, the last one in the...
Yeah, so first, good afternoon, everyone, and vanakkam from my side. So on innovation topic, I think the most part I read is the Reliance tagline, which say growth is life. And I added to that the innovation is growth, you know. And why I say that, because I think we also know the trend, you know. So trend bante nahi hai, banaye jate hain. So I think on a SIP mode also, I think, as you said that SIP top up or SIP, pick up, I think, and also as rightly said that it all depends on the investor, you know. And we are talking about 2035, which is Gen Beta, which is going to become, right? So far we have seen Millennium, Gen Z, and so on. So I think all it depends on how we as a fund house, how the industry innovate the concept for Gen Beta, who is going to be more and more high risk taker rather than the going on the past, right? That's why we believe that. So I think I personally believe that it all depends on as an industry how we be more innovative, like how we are going to the multi-asset allocation fund. There were no gold concept. Now gold is there part of the portfolio. Silver could be the next one as a part of the portfolio. And of course, the SIP. And now new innovation which SEBI himself is talking about 250 rupees SIP. So I don't know how is all this going to be happen. So I personally believe that yes, innovation should be there across either product or concept or ideas or online. So I think I'm strongly supporter of the innovation concept, ma'am. Thank you.
Wonderful. This multi-asset, I think it has the most innovation. Each AMC has its own. So we will have to, as MFD, study inside and see what is the combination. So that has the most innovative one. Now this question would be for all five of you, for like, which innovative product in your AMC's basket is very unique to your fund house? Because we might have missed it out to see. When you say all of us will really look into that fund. So, like for example, when you said about momentum in SAMCO, you have that's your USP. So like that, what is the most innovative thought about, and you have designed one product? So all of you can just tell one fund which is very innovative for your fund house.
So in our industry, my take is there's nothing called as innovation, because once an AMC launches, looking at the AUM1 AMC garners, we immediately launch the product. But to answer your question, the one product which stand out today, and with all the previous speakers who have given the trend of value investing, growth at a reasonable price, we have recently come out with a fund called Conglomerate Fund. Okay. So that's a unique proposition which one should look at from Aditya Birla Fund House, because that fund invests in companies which are having long legacy, strong legacy. They are diversified and looking for more diversification. They have they have more business lines than one. In short, it is nothing but an Indian MNC. And looking at the next CapEx cycle, these companies are going to be best suited for it. So that's one fund which I would really recommend, apart from rest of the funds which are there, like you have Quant, you have GenX. But Conglomerate, as of now, stands apart.
Okay.
Yeah, so to talk about Motilal Oswal, I think, again, I also would like to put it across as a unique product. So currently, maybe when we see the valuations of digital companies in India, we feel that they are very undervalued by nature, right? The businesses are pretty strong for last 5 years, be it the scale or the size of the business, but they command more better valuations. To put it across, Motilal Oswal Digital India Fund. So we follow the pillars of digital ecosystem are one is the smartphones, then we have the mobile data, high-speed mobile data, followed by digital business and the payment infrastructure. So all four parameters are in place. So considering that, we believe in investing, having a concentrated portfolio with investing in new gen tech companies. Yes, the major exposure to be towards the new gen tech companies, followed by the tech services in it. I think Digital India Fund is what I would like to suggest.
Okay.
So we feel investors do not have many low volatile, better return opportunities. So our first fund, we're likely to come out with a hybrid debt fund, which will target meaningful returns. When I say meaningful returns, post-tax, post-inflation, 3 to 4% real returns with low volatility. So I think this can be done through a combination of dynamic debt plus equity arbitrage.
Oh, that's
so
wonderful.
we are targeting that category.
Okay. For you, sir.
Okay, so thanks. I think in our basket, our fund called Bank of India Mid and Small Cap Equity and Debt Fund. I'm sure some of you would have experience also. That fund, why we say unique? Because as rightly from UNIFI said, the hybrid concept. So, and also we heard some speaker that still for long-term mid and small cap category still looks better. So this fund invests 65 to 70, 80% in equity, predominantly in small and mid cap category, and balance 30, 35% in a short-term accrual debt. That concept is only to protect your downside in any market. Now, the beauty of the fund is, as the fund gets any small cap or mid cap stocks, and if that company does well and becomes large cap, the fund has to mandatorily sell that stock and again look for new mid and small cap category, right? Now, by virtue of this definition, in last 5 to 7 years, if you compare this fund with any pure mid cap category, this fund has outperformed that category also because of having 30-35% drawdown of downside because accrual is there, and again to look for the new mid and small cap stock in the portfolio. So that's fund which I personally believe. Yeah, thank you.
So thank you for this question. We take pride, and with complete humility, we want to tell you that with such a big industry, such a big lineage, we are the newest AMC, and we take pride that we have created a category which many of the AMCs will not be able to use this particular statement. We created a category called as active momentum. If somebody wants to look at us, somebody wants to understand what we truly do, we are actually a truly active fund manager who takes market data into consideration, completely algorithmic in nature, completely quant based in nature, and based on that we decide whether to be risk on or risk off. So let me just give you one example. At this point of time, that fund is 50% hedged, and this is not as on today, this is hedged for the past 10-15 odd days. So when the risk on market was going on, that fund went aggressive and chased returns. When the risk off happened, that fund has completely started taking protective bets. And because of that, what happens is when you create the category, when you want to be known for that particular product, you tend to typically do more hard work, more research and more innovation there. And we truly believe at SAMCO Mutual Fund that innovation and speed is the only way of going ahead. Because even if you want to stay at that particular place again, you need to run, because the things are moving at that particular pace. Yeah. The markets are being very, very fast and very, very dynamic in nature. You cannot have a passive approach. So we truly believe that one of the products that will define SAMCO in the next decade or so will be SAMCO Active.
Thank you, sir, for that. So we heard from each one of them what is the most innovative product, one of the innovative products from their fund houses basket. We can probably look at those funds if we haven't seen earlier. So next question would be, now we have the Gen Zs and the millennials investing. So how do we communicate better to them the innovative products as MFD? How do we do that? Like to communicate the innovative products to them for the next generation, how to make it more attractive or to communicate these products, these innovations?
I take a step back and look at innovation in two parlance, because as manufacturers, as AMCs, we have two set of customers. One is the investor and second is our channel partners. So in both these parlance, we are seeing the second generation coming in. In both these parlance, we are seeing women investors as well, women MFDs taking the front lead.
Yes.
So if I look at both these things separated and I put it in product basket, see, we are 5.5 crore investors, unique investors in mutual fund industry. So that's up from 1 crore in last 4 years. So these investors are going to graduate over a period of time. So for them, they will move from return based, as I told you, to more goal based. So whatever my colleagues are saying, multi-asset, asset allocator, or debt hybrid, that category is going to take the shape. Second, which I foresee in this category, which are going to be more graduate, are a shift happening in passive and alternate AIF PMS category. So that's the maturity which these people will have, and they will continue. The second generation of these investors, because if I'm a parent, my child comes in, the risk appetite are going to be completely different.
Correct.
They are not worried about roti, kapda, makan, because that is taken care by their parents, that is taken care by you, because you have advised their parents and they have created wealth in last so many years. So for them, it is always going to be a risk-on strategy where new themes, new categories, and that's where last entire year, if you look, we have seen thematics garnering more than 90,000 crores, net sales I'm talking about, and that is April till December. So that's the Gen Z or the new millennials investors who are coming in. For them, robo-advisory or ready-to-made type of products are going to be there. The third category in investors are going to be the niche, which we look at, because India is a startup country. We have so many unicorns as we speak. For them, they want their portfolio to look like what they want to perceive. So they will come and say, this is my 500 crores, this is what my mandate is, you manage that way. So we will see boutique fund managers coming also in this picture. Now, the second part of your question, how we look at MFD space, because that's my second set of customers. So we take pride in saying we have the best industry training programs through Nipun platform, through IEDD platform. In this continuation, we have launched 3 programs, because we see many second generation kids joining their family business, father's business. So there's a program called Legacy Leap, which we have launched. It's a 4-day comprehensive program at Bombay. I would request everyone who has their kids joining in or about to join to take benefit out of it. Second is Yashashvi for our women MFDs or the spouses of the husbands who want to join their family business. So that's again a program, 2-day program, which we have recently launched. And last but not the least, Fulcrum, which is again, when you want to grow, you are at 100 crores, 200 crores, 500 crores. We foresee the industry growing at 20-25%, and same would be with you. You alone cannot do anything. You have to build a team. So how we will help you groom your team, back office team, sales team, the program focuses on that. So that's overall in terms of customers as well as in, distributors.
That's a wonderful information, because this we never expected. For all the segments, for the female MFDs or for the next gen or for us MFDs to scale up, this is one innovation which AMC has done not only in the product side but also on the to scale us up. Thank you for that information, sir.
Yeah, just to add on the client side. So the old tradition way may not work with the new Gen Zs, right? Because the network is different, the way they connect is different, their more presence on social media is going to be important, right? The way we share information is going to be important. Maybe do a different color coding, the language to be more simple to address their queries. These are ready to take a risk.
Attention span is also
Attention
little.
span is something which is, so these are some few points we feel that focusing more on the digital way around with the new Gen Z will be the key core focus to look at.
Oh, that's wonderful. One other query is that while technology is enhancing us experience, but don't we feel it is also widening the gap between us and the investors and the, because they can do it yourself, they feel. So technology or the innovation, I'm saying both ways. So where do you, because for us, only the personal one-to-one space will help us grow. Because this needs, this business, we need more of personal attention, hand-holding the client, all that. So how do you think this has widened the gap, and how do we, through innovation, how do we gap it, bridge that gap?
If you ask me very honestly, I think still it has not widened the gap. Why I say that? Because see, still you know that, I mean, still your 80, 85, 90% business of industry is through the partners and channel partners. When you're saying digital widening is like a direct what you're referring to. So I personally believe, and I think Gajendra also said in a presentation, that still the investors want one-to-one touch personal. Yes, the new generation, what you said is right, but then we had a very good experience also of the new generation experience in last 1 or 2 years. I'm sure we all had seen a kind of SIP book stopping, and which we are not aware of, right? So I personally believe that still whatever the, yes, as a MFD, we have to upgrade our digitalization approach, information sharing, because that is available now across. But personal touch or the human touch is going to remain, okay? And as Rajan said that, and some last 15 Sunday, he has been meeting customers. So same for us also. So I think I am strong supporter of the personal touch and human touch is going to remain. Along with that, yes, you have to upgrade your approach of sharing information, digitalizations or networking. So that's my belief.
Thank you. Your view on that, sir, Mr. Saravanan?
Yeah, certainly. It's our responsibility to educate the new set of investors. They have seen only the good times. So we will have to temper down the expectations. So like the previous speaker showed the stats. Finally, they should understand how the stock market works, how the returns are made. So when the GDP return, long-term GDP return, nominal terms is about 12%, and your corporate earnings are mirroring that, and your market returns also will soon gravitate towards that. So if they feel that 25% is par for the course, they are going to be in for disappointment. So it is our responsibility to educate them, and it is our responsibility, when I say it's AMC as well as the MFD community, to create more content in various social media forums, which they are constantly seeing.
Innovate.
And influencers have taken that space, and not all of them have an honest approach. So it is our responsibility to put more content and educate them and set their expectations right.
Correct. So you can throw some light on the emerging trends in innovation, like AI, blockchain, all that has come. So how in the AMC space this is implemented, or
I'm taking a step back to answer your previous question also.
Yeah.
Where we say that the gap between us and them is rising. The question is, are they moving fast or are we moving slow? It is happening because we are not adapting to a lot of stuff. If we have the clarity of thought, if we can put in a short story and can create a narrative around it and can create a small video, that is how much the attention time. So it is always going to be a two-step meeting. If in the first step you can take their mind share through that narrative and through that video, you will always get a longer time share from him, and that is what we need to do. As far as investment goes, ma'am, at every point of time we need to be realistic in terms of what is happening in the market, and we need to be very, very on our toes in terms of the data analysis. Data science is the most important part in this kind of a market, so that we can navigate properly. But at the same time, you need to have that courage to stand out in the industry and be counted for what you think that can happen over a period of time, and play out that entire cycle during that period of time, and then be recognized for that particular stuff.
Thank you. Then one last round, we are just running out of time. So all of your thoughts on passive investing, how the passive investing space and how product innovation helps in this passive investing space. We have in products also, we have in the passive, even the indexes are innovative now for the passive funds. So
passive is going to take a massive shape when we look at data points As we speak, US may the passive AUM is higher than the active AUM. If we look at the India trends, we are exactly 10 years behind what US does today. We are almost a decade behind them. So when we look, and the theme also goes in 2035, how we look at it. So passive by far will be a massive play which will be there. There is a reason to it as well, because the investors are graduating. Like my colleague also said from SAMCO, they have active momentum, they have, so indexes are also coming out with new ideas,
Yes,
and that is
exactly.
attracting the Gen Zs. The people who are moving fast, they don't have time, so they want something to mirror the index, and passives are going to be a big game, according to us. So,
Exactly.
and when we say we are at 68 lakh crore, ex EPFO mandate, the passive AUM is already at 6 lakhs, which is almost 10%. So if we want to grow, just look back, okay, if you have a 500 crore AUM, whether 10% is passive or it is lesser than that. If it is not, you have to align with the industry growth, because that's where the investors are coming and investing. So you have to educate the investor, you have to align with the thoughts to grow your AUM.
Yeah, just to add on, I think passive stands out at 16% of the total industry volumes as of now, right? We have around 515 schemes with different indices, with different ideas on the passive side. So with that numbers, as quoted by my friend, so it is also important that there are new ideologies which is available for people who want to invest. I think that has been addressed more on the passive side. And to give it a little thought that what differently we have on a unique proposition at Motilal,
I was
I
about
think
to ask that.
one is the microcap 250 index, where you are going to have an option to participate of the, apart from the top 500 stocks, so you are able to participate with the next 250 ideas, and which is a proven fund, and it's a great opportunity, and a lot of youngsters also keep investing in these funds.
So that's what the two questions clubbed in. One unique or innovative fund in the passive space of yours we can look upon.
So far in our fund, we don't have any passive fund. We have all the active funds. And as rightly said here, if you really remove the EPO.
You are very MFD friendly.
So, but yes, I think
Just for
if you
a...
look at in market, yes, people are innovating, and but so far, if you look at the data, I think mostly the passives are happening from the corporate and institutional side, or the PF and gratuity and so on. It will take own time, but yes, I think as a MFD, we should always be looking to which passive is. I think mostly, if you ask me, the retail investor, more looking at the index passive rather than the other passive fund. But I think, as I shared in beginning of my conversation, that still if you look at 85-90% business of industries through the channel partner or MFD or IFA so-called, will take own time, and passives are not of today. It's been available for last, almost 10, 11 years, right? It's not like today's, but yes, today people are more talking on passive because of the awareness, or the Gen Alpha, Gen Beta, who is looking to the expenses, or the on the base of self. So that's way I think. Otherwise, I personally believe, I think active funds are still
Absolutely.
there. Yeah. Thank you.
So I have a differentiated view on this particular subject matter. We don't do passive at this point of time. We don't intend to do any passive in the near future. Now, why is there flight towards passive is because of the way active has managed the active fund management. Most of the active fund management today have an active ratio of somewhere close to only 20-25%. Meaning their entire portfolio out of 100 rupees, 75% is similar to passive. So there is a trend of, so there is a very natural movement from distribution and also from the investment perspective, that why should I pay a 2% fee for something which is only managed 25% differentially and still not outperforming. So that's why that shift is happening. So that in the next 10 years, we will see that the middle fund management approach of 70-75% hugging to the index will either move towards active or will completely move towards passive. And that is where the growth of passive will take over, and there will be an inherent shift from a so-called a middle fund management route to either to the extreme, either towards an active side or towards a passive side.
Thank you. So your fund house's view on the passive,
No,
and
both are here to stay. But
are you planning to bring in passive funds?
Yeah, both active and passive are here to stay. As a fund house, we will in the phase 1 we are launching only active. See, India opened up in the 90s, right? You take 1993 when Franklin Blue Chip Fund started. I think the oldest running mutual fund. You take Sensex in December 1993, and where we are, 3,200. We are somewhere in 76,000. And same, so it has delivered about 11.5% in the 31 years. Say, let's say some ETF had started on December 1993, you would have got 11.5% CAGR.
Yeah.
We put it in crore term. 1 crore invested would have been 26 crores in the last 31 years. Same Franklin Blue Chip Fund, it's delivered about 16.5%. So same 1 crore is about 100 crores. See the massive difference. Why should investor lose out on that? So while I agree that passive may be lesser volatile because the fund manager risk is eliminated, but I feel both are here to stay. And India is a heterogeneous market. You will have investors for both.
Absolutely. So with that, with these, we will just sum up. I see, not that in the session, not that what we didn't know, but we also had a view of all the next 10 years when you see, as they said, this passive space is going to really take up. So we'll have to be more educated on that side also, for us to at least tell them what is passive, why the differentiation, all that. We can't stop them from investing from passive, but always it's better to be informed. So thank you so much, each one of you, for this informative and very inclusive session. We really shared the good thoughts. And of all, they also told us about their innovative funds, what they have. We can look at that also. Thank you so much, sir, each one of you.
Thank you.
Thank you. Thank you.
Thank you.